to welcome you all back again in the first parallel session of GIES 2015. It has been approximately 40 years since Islamic bank finance started, and 40 years later, we find that we have achieved $2 trillion worth of assets. Nevertheless, we really again find approximately more than 1 billion unbankable people within the Muslim population. And that obviously attracts the question of financial inclusion strategies and frameworks. And this is going to be the topic of this session today. And I don't want to take a lot of time, but I'd like absolutely to invite our keynote speaker, Professor Dr. Rafat Abdelkarim from the International Islamic Liquidity Management Center, to provide us with his keynote speech. So please welcome, sir.
Ladies and gentlemen, good afternoon to you. I would like to start by thanking the organizers for inviting me to participate and give a keynote speech on financial inclusions at this year's summit. The global financial service industry has witnessed another challenging year in 2014 against the backdrop of a diverse range of macroeconomic and political factors affecting financial sectors. Despite its history of sustained growth momentum, Islamic financial system seems to be exposed to broadly the same systemic risk factors and volatilities as its conventional counterpart. In this respect, the most significant macroeconomic event has, of course, been monetary policy changes in the United States. Following initial indications in mid-2013, the US Federal Reserve ultimately began cutting back its monthly stimulus bond purchase in January 2014 and fully scaled back the program in its Federal Open Market Committee meeting in October 2014, perhaps signaling an end to the long period of low interest rates. Meanwhile, an improving US economy backed by US dollar strengthening against the world's major currencies has caused additional market waves, triggering another round of sell-offs of emerging markets' assets. This in turn has put downward pressures on the currencies of those markets, including key Islamic finance jurisdictions, while causing considerable volatilities in their financial indicators. This year has also seen macroeconomic challenges such as decreases in global oil prices and currency concerns in emerging markets having an effect on the Sukuk market or the Sukuk sector. While prognosticators still hold that overall long-term indicators favor future growth of Sukuk or for Sukuk, global Sukuk issuances for the first quarter of 2015 declined to $18.7 billion from $24.2 billion in the fourth quarter of 2014. More recently, in a recent report, Standard & Poor's rating service, S&P, warned that the global Sukuk market is heading towards a correction after Bank Negara Malaysia, the Central Bank of Malaysia, one of the most active Sukuk issuers, stopped issuing earlier this year. S&P revised its forecast for total Sukuk issuance in 2015 to nearly $50 to $60 billion from its earlier forecast of $100 to $115 billion. These forecasts appear to be playing out accurately as global Sukuk issuance reached $38.6 billion in the first 6 months of 2015, compared with $67.2 billion over the same period of last year. Again, these challenges echo similar conventional slowdowns. Overall, the IMF has cut its global growth forecast for 2015 to 3.3% in October, down from its 3.8% estimation earlier this year, citing stagnation in Europe and Japan and the challenges in emerging economies. Still, the past few years had witnessed solid growth in the global sukuk market, as annual issuances almost tripled from 45 billion US dollar in 2011 to 118.8 billion in 2014. In the same year, in 2014 also, we saw a number of sukuk-related highlights, including median sovereign sukuk issuance from Maldives, Senegal, South Africa, Luxembourg, Hong Kong, and of course the UK. Furthermore, positive trends in the cross-border diversification of sukuk issuances have meant an increase in foreign currency sukuk from domestic issuers, particularly in US dollars. Furthermore, sukuk issuances are being routinely seen listed on noted stock exchanges from London to Luxembourg and here in Dubai. Overall, the Islamic financial service industry has been an upward trajectory, evidenced by a double-digit compound annual growth rate in assets of 17% between 2009 and 2013. The industry's assets are estimated to be worth 1.87 trillion US dollar as of July 2014. As some of you have no doubt heard, more recent projections estimate that the industry will reach a value of 3.25 trillion US dollar by 2020. Now, despite this relative growth, one area in which Islamic finance is struggling significantly is in financial inclusion, technically defined as the share of a population who use any financial service. Increased financial inclusion has proven to be linked to salutary economic conditions beyond those associated solely with improved financial depths. In this context, individual access to any kind of wealth or asset. Greater financial inclusion as a broad policy objective has gained importance since the early 2000s and been a common goal for many governments and central banks in developing nations. In the early usage of the term financial inclusion, generally referred to the delivery of financial service to low-income segments of society at affordable cost for service providers and financiers. During the past decade, financial inclusion as a topic of economic theory has evolved into 4 dimensions. 1, easy access to finance for all households and enterprises. 2, sound institutions guided by prudential regulation and supervision. 3, institutional sustainability of financial institutions. And 4, competition between service providers to bring trustworthy alternatives to all customers. Obviously, these concepts address very real problems. The World Bank 2014 Global Financial Development Report, which was devoted to financial inclusion, by the way, reports that more than 2/3 of regulatory and supervisory agencies around the globe have been tasked with encouraging financial inclusion, and more than 50 countries have set formal targets in this regard. Efforts here have included standard setters in the Islamic financial service arena. For years, IOFI, or the Accounting and Auditing Organization for Islamic Financial Institutions, has had a governance standard specifically related to corporate social responsibility. And recently, even the Islamic Financial Service Board, or IFSB, has added financial inclusion as one of its priority projects in the upcoming years. However, despite the essential role of financial inclusion in the progress of stability and equality in a society. As of 2010, 2.7 billion people, or 70% of the adult population in emerging economies, still have no access to basic financial services. A more recent 2015 report from the Institute of International Finance, IIF, states that about half of the globe's adult population is completely unbanked, meaning that they are without even a bank account. Unfortunately, a significant part of them come from countries with predominantly Muslim populations. Although financial inclusion and related concepts of corporate social responsibility have increased in importance in conventional finance over the last few decades, they are still considered alternative or complementary philosophies to the main profit motive in conventional market economies. However, financial inclusion and its attendant ideals of economic justice is fundamental and inseparable from concepts of commerce, wealth, and finance in Islam. Although I clearly cannot now go through the voluminous scholarship and evidence of the importance of economic justice and financial inclusion in Islamic economic theory, I trust that this is not unknown to many of you here today. Risk-sharing forms and redistributive concepts such as musharaka, zakat, waqf, and qard hasan, or benevolent loan, as well as anti-speculative ideals embodied in the Sharia prohibitions of riba, pure rent on money, and gharar, contractual ambiguity, clearly demonstrate how financial inclusion should be essential to any application of Islamic finance. So we have very far to go in this regard. But the questions remain: first, why does the Islamic financial service industry lag behind in this area, where it has so much theoretical fuel to propel it? And second, how do we improve financial inclusion in Islamic finance on the ground, so to speak? On this latter question, the how of improving financial inclusion, I will leave this to more informed and rigorous experts that we will hear from during the course of this summit. We will all here have already heard about the need to focus on infrastructural projects, micro-takaful or Islamic insurance, and musharaka transactions, musharaka is partnership, as well as increased financial education as partial countermeasures to poor financial inclusion. Indeed, these things and more must be done to fulfill the imperatives of economic justice inherent in the Sharia. But I wish for a moment to address the initial question of why we are failing in the area of financial inclusion. In a recent report from Thomson Reuters on social responsible investing in Islamic finance, I noted a very astute point on this question of why. The report notes that, and I quote, Islamic financial institutions' religious obligation to act on behalf of its stakeholders in a way that is not just not wrong or unjust, but also encourages the right type of behavior as recommended by the IOFI standard, provides a wide berth of these institutions to expand into other areas of responsible finance and may compel them to, within the guideline beyond what they can bear. The challenge in the real practice of Islamic finance is that the theological arguments have focused primarily on defining and cataloging the specific practices and activities that are prohibited, while paying much less detailed attention to areas where financial institutions can act to encourage what is right, i.e., environmental conversation, good labor, and social practices, and increasing financial inclusion. I end the quote now. As we contemplate which transactions and practices to implement, what programs to fund, and which jurisdictions to target in order to increase financial inclusion, we must keep this philosophical challenge in mind. At the heart of our problems with financial inclusion in Islamic finance is that in the urgency of establishing the industry and focusing on the parameters of Sharia compliance, we have indeed lost some of the urgency with respect to our responsibilities to promote the economic well-being of the entire Muslim community. It is true that for Islamic financial institutions and financial inclusion, compliance with Sharia prohibition is just as important as doing what is right. As we rebalance our priorities and recommit ourselves to the excellence required to go above and beyond business as usual, to fulfilling our responsibilities to strive for economic justice, let us keep in mind that Islamic finance will only remain vital and relevant to the extent that it aims to embrace the financial needs of all Muslims, rich and poor, in all walks of life. I thank you very much for your attention, and I appreciate it. Thank you.
And now to the panel session. I would absolutely appreciate getting the chance to invite Mr. Wissam Fattouh, the Secretary General of the Union of Arab Banks, as the moderator of the session. So please, sir.
Good evening, everyone. Before we start actually this session, I would like just to highlight some numbers, which I believe that it's helping our discussion with our speakers. First, I would like to talk about the Arab banks. I'm here representing the Arab banking sector. In the Arab world, we have around 400 banks. The total asset of those banks around $3.1 trillion. And the total deposit is around $2 trillion. Those banks have lending the economy in an amount of $1.6 trillion, which represents almost 60% of the GDP. Now, the number of Islamic banking is increasing. Now we have more than 100 Islamic institutions. I think there are 64 full Sharia compliance, and the other, they have some windows with the conventional banks. As you may know, the total number of the Islamic institutions is around 360 worldwide, out of which 250 they are fully compliant, and the 110 is they have some windows or some Islamic services. Now, Professor Rifat Abdelkarim, he mentioned in his speech that the financial market has increased and it will reach around $3.25 trillion by 2020. And I think currently we're talking about $1.8 trillion. Last year we were talking about $1 trillion, so it's fast increasing. Now the main question, if we want to talk about the financial inclusion, the president of the IMF and the chairman of the World Bank have mentioned that 2 billion people, they are outside the financial sector. They don't have even a bank account. So if you want to discuss about the financial inclusion, let's ask our speaker, how can we help in this? So we start by Mr. Bashar al-Natur, which is director from Fitch Rating. Having speak about those numbers, Mr. Al-Natur, and I spoke about 2 billion people outside the financial sector. If you want to really speak about the financial inclusion here, and well, how do you think the Islamic financial institution meet the need of those people? How can it help? Could you please give us like an overview?
Yeah, I mean, I think it's worth mentioning that the modern banking and Islamic finance, as we've seen, started just 40 years back. So I think the focus has been on the top of the pyramid, i.e. the institutional investors, the sophisticated corporates, etc. And it did not yet go through the wide and the bottom of the actual pyramid, which is the vast majority of the population, specifically in the Islamic finance countries where Islamic banks are more active. So I think it's worth starting by looking, is there a deficiency in Sharia and Islamic finance or not? And I think the answer to that obviously is not. Actually, there is a vast variety of instrument and tool within Sharia that starts from Qard Hasan to even Zakah, Sadaqah, and goes all the way with equity partnership, JVs, entrepreneurs, etc., etc. So the actual base of inclusion of the various levels of the community is there in Sharia. It does not need a lot of innovation to start that, so it's built in. However, what we see lagging is having the right institution to serve that. And I think one of the questions is it going to be the financial institutions and bank, or does it need to be a specific institution to deal with that? Another issue is the regulation and the push from the relevant authorities and government to actually make that inclusion. And I think also another dimension which the panel would talk and discuss, the inclusion of other than Muslims and Islamic finance countries. And I think with the panelists and my fellow panelists, we will discuss all of these issues.
Yes, thank you, Mr. Antud. Allow me please to call Mr. Al-Majid and Mr. Rick Putner to join us in this panel discussion, and we just go to the next discussion. Mr. Al-Majid, thank you so much for being with us here. So, being the CEO of Bubian Bank as a banker, and as I mentioned in my brief remarks, that I said the Arab banks in general, they have lending out of almost $1.6 trillion, and that by March 2015. However, only 10% go to SME. Now, we all agree that the SME is the best tool for financial inclusion, and it's one of the tools, but it's probably the most important tools, because the SME goes to the people, the poor people, to people who doesn't really have a financial knowledge, and we need these people to be in the financial sector. So, Arab banks and the World Bank have conducted a survey, and we find out that it's very low percentage of the SME. Now, as a banker, if you want to go to the implementation level, how do you see this? How can we really apply and help people to be included in the financial sector?
I think the first thing is that, let's go back one step, and we always say financial inclusion and getting SMEs. I think the first thing is that looking at banking, and I agree with my friend that the business model of financial institutions and banking in the normal situation that we see right now cannot service these segments. It's a high cost operations, branches, people. So, and I heard this morning Mr. Mohammed Yunus about what he believes in, but which I think all of us applaud him when he did that, when he says that. But for us as banks, the mandate from our shareholders is profit.
Sure.
I hope that our shareholders tell us, no, profit is number 3. Our shareholder says, no, profit is number 1. And the second, within, these are two things. Profit within Islamic. This is the two major things. I don't think, with all my respect, and that they will care about, they will care with the percentage of their profits, but not people or the planet. I think I'm not criticizing Saad Mohammed, but I'm saying the way he looks at the organization is different from us. So this is issue. The other issue is that the technology will serve these people. And right now, and you've been talking about this 2.6 billion, and I was amazed that, yes, I know 2.6 billion, but right now you're saying 1 billion, Mr. Rafat said, 1 billion are Islamic. So look at the percentage-wise. The Islamic is 1 billion, and the total is 2.6 billion. But from the research that we look at from the Gates Foundation, from these 2.6 billion, 1 billion has mobiles. And I have some figures here, which maybe I don't want, but I will at a later stage maybe try to cover this. The cost of a transaction in banking today is, if we say as a percentage, the ATM costs 0.1%, telephone banking or internet banking costs 100% less, and if it's mobile from the customer point of view, from his mobile, it's 1/10. So it's a very, very cheap to do it through mobile. The banking, I think, the overall and Islamic banking, I think, are missing the boat. The people who are taking this forward, I think it's like the mobile carriers. Central bank, until now, they are protecting the Islamic banking or the banking overall, but I don't think they will tolerate. They will go and partner with mobile, and we have examples. We have examples in Bangladesh, we have examples in Philippines, and we have an example in Kenya, where right now mobile payments are increasing 3 times. Actually, in Kenya, the mobile payments is 40% of GDP. The people who were unbanked were 30%. Now they were only banking 30%. Now in Kenya it's 60% because of the combination. Yes. So I think it's not the issue of Islamic banking. I think, and let's try. Now we always say Islamic banking. I think it's banking overall. Banking overall will go in this direction. The carriers will be the benefit. The banks will lag behind, but I think financial inclusion will happen. It's only time. As per the research that I told you, right now I have just some numbers. Within 3 years, 900 million from population will be having an internet. They say by 2020, all the world, 90% of all the world will have coverage broadband. We know, we read about Google and Facebook and all of these guys that are going to have drones all over the world. Well, this is happening. The handset, less than $100. I have an example, a very interesting example. While I was coming from the hotel just now, and there was a woman who was driving the golf cart here. And I told her, where are you from? She said, I'm from Kenya. And I said, well, you know, I'm going to have a speech. And one of the things that I looked at was preparing for the speech, a company called Mobile Pesa. It's a Kenyan company. And this is where the financial institutions, it's not a bank. It's central bank, Vodafone, and another carrier. She says, yes, I use Mobile Pesa. I told her, you don't have a bank account? She says, no, I don't have a bank account. I said, why do you don't have a bank account? She says, because mobile is with everybody, and I can pay person to person, as I think our friend here was going to talk about, person to person, without the need of banking, opening an account, and also this also covers the regulation right now, anti-money laundering, and know your customer. All of these regulations, I think, will not let normal banks, Islamic or non-Islamic, to get into this business. But I think we're missing the boat, and unless we change the whole structure that we operate in, it's going to be an issue.
Yes.
But I'm saying it's coming. With us or without us, the financial inclusion of all population, Islamic or not Islamic, it will come.
Yes, I totally agree with you. However, before we get into the solution of financial inclusion, and one of the solutions is the mobile banking, I think we have a lot to do before that. Maybe also the financial education, because we're talking about the people who doesn't have any ideas about financial and banking, even if they have a mobile phone. And that allow me please to go to the innovation level, probably Mr. Putner. How do you see? You see, Farah Bank also have so many survey, one of which that we have conducted the economy assessment report for the Arab board, and we have really realized that 17% they are unemployed. We're talking about more than 20 million people unemployed. And if you want to make more segmentation, there's people between 14 years old to 25 years old, they did not even went to the school. How can we include those people? We're talking about like 8 million people, which age between 14 and 25 years old. They did not even went to the school. So how do you see, being the ex-banker, and you were the CEO of the largest bank in UAE, and now you are in the business innovation business, and what's your experience? Tell us about how do you see the solution for that?
Well, I would agree with Adele here. I don't think banks in their current state, doesn't matter whether you're Islamic or conventional, are geared up to the issue and the problem of addressing a huge amount of financial inclusion that we see in the 2 billion unbanked population in the world as one thing. But I do see that this area, the UAE, Dubai, is a really good place to perhaps concentrate the innovation that is necessary to educate the younger population out there. As Adele said, they're all going to be connected, or the connectivity is going to increase exponentially, I think, over the next few years on the internet. There's going to be a lot more mobile phone technology that comes up. Accounts, Agreed, and M-Pesa in Kenya is a great example of it, of how things can develop pretty quickly. I'd just like to, from our point of view in the UAE, give an example of some innovation more closer to home, in the sense of Beehive, for example, set up nearly a year ago, launching a peer-to-peer online marketplace lending, which is really, again, on the inclusion side, because we're looking at inclusion of a wider choice for SMEs here in the UAE to access funding. We've done over $5 million to over 40 SMEs over the last 10 months. So it's an example of innovation. It's an example of inclusion, because banks historically here, we all know the funding gap in the Middle East is quite significant for SME clients. And what has happened since then, in September, we launched the first of its kind Sharia module on the site, which is certified by the Sharia Review Bureau in Bahrain. That was certified last month. It is the first certification of a Sharia module on a peer-to-peer online marketplace lending site. So this is an example of innovation, which is what this conference is greatly focused on today. A number of people have said 2015 is the year for innovation. I think it's also inclusive, because it's opening up the opportunities and the avenues for access to funding by SME, but also for investor opportunities on the Sharia front, and we know that those are always in demand in terms of new products. Everybody's always looking for new products. So this is the tip of the iceberg. It's an alternative investment for investors. It's also supportive to the economy, because it's enabling SMEs to act a lot faster. They're creating jobs. They are the engine room of any economy. And the more that we can support the SME market as an example of inclusion, I know that it's a lot wider in terms of its definition around the region and around the world. But this is a start. This is how we start, improving, if you like, the Sharia product range. This is going to continue. Innovation is key. And I think, as an ex-banker, I would say that you've got to watch out as a banker now for a lot more disruptive technology-led finance change coming through. You're going to see more and more of it. If you look at numbers, the amount on peer-to-peer lending sites, roughly at the moment, is about $15 billion, forecast to go to 1 trillion by 2025. So this is an alternative source of funding very seriously coming through. And it's an example of how we, as if you like, innovators in the UAE, can help expand the Sharia side of banking, but also help create inclusion.
Do you speak with the end user? You have dialogue with the customers themselves, or you'll play a mediation between the banks and the customers? Mr. Rick, is that question?
Sorry, could you repeat?
No, I mean, are you playing a role of mediation between the banks and the customers themselves?
I think what it is, Sam, is an alternative source of financing for small corporates. We're basically linking smart investors to credit-worthy businesses. And it's really, if you like, cutting out the middleman. There's a lot of cost, as Adele said, in the banking system here. There's a lot of cost that impacts financial sort of interest rates or profit rates, etc. At the moment, we're achieving 20 to 30% savings for small businesses,
All right.
putting them directly in contact with investors.
That's good to hear. Mr. Natur, I know that you have some remarks to say, but really, we would like also to hear from you more about the role of Islamic finance in helping the financial inclusion.
Yeah, I think before moving to that, it is important to highlight one point, which I think we did not discuss. It's risks. As you're going down in the pyramid, actually, the quality of your customers that you're dealing with, whether you're a financial institution or whatever, is going to be of a lower quality. And I think it's worth just stopping at that point and mentioning something. There is nothing in Sharia that prohibits you profiting. So profit is part of Sharia. Risk sharing is part of Sharia. The only thing that you don't need to pay back your contractual if it's charitable. So if you're doing a charity or qard hasan, that's fine. However, if you have an obligation that is based on a contractual commercial terms, which is the vast majority of the Sharia that we have, your obligation does not fall, even if you die. So I think that is an important point, and it has by itself a small risk mitigant that is related to Sharia and Islamic finance. I think the inclusion of that, it needs to have, as we've seen with the big innovations, i.e. the Islamic banks themselves, the contracts that they do, the sukuk and the structures for the complex part of the business, but for the bulk of the business, we will see other innovations. We've heard some of them here, and I think there will be a point in time where you will have profitable institution, whether it's part of the banking system or another institution, where they will do profit sharing based on Sharia, and that does not translate directly to losing or not having profit, i.e. the profit being an objective, but it might have other parameters in terms of risks.
Sure. Yeah. I would like also to ask Mr. Al-Majid, let me talk about the financial exclusion, not the financial inclusion. And he comes up with the challenges that facing the banking in general and the financial inclusion in specific. So the law and the regulations that issued by regulators, the international regulators like Basel, like FATF, especially the KYC rules, the Know Your Customer rules, and the anti-money laundering rules, CFT rules, and other rules like FATCA. FATCA is, it's a tax rule, but has to be applied by everybody. And this really, we witness that it's a big challenge for the banks to continue finance the market because they're making like financial exclusion. They have what the phenomena, what we call de-risking. The de-risking between the correspondent bank from US banks to our region. We also witness the de-risking between banks with each other and de-risking between the banks and their customers. And this, to me, is the biggest challenge for financial inclusion. Do you agree, Mr. Majid, about that? Being a customer, are you really not dealing or making a de-risking for some of the customers who would like to open an account? And even the mobile banking. The mobile banking is not really regulated. Is the regulations that apply to mobile banking?
I agree with you. It's, the regulation that's coming right now is not encouraging us to go further. It's know your customer, the anti-money laundering, FATCA, and now it's not FATCA. I think EU are coming, and most, I think within years, all the countries in the world will apply a FATCA version.
They are already applied, I think.
Huh?
It's already applied, I think.
Yeah, I'm saying, do it. So for us, it's going to be, the discussion I had this morning, and I've seen it, it's nice to have it or talk about it, but it's in reality the banks in there, and I'm saying under the umbrella of supervision now cannot apply all of this. And that's why we said mobile carriers or mobile banking. Of course, when you talk about anti-money laundering or FATCA, the people we are talking about, they're earning less than 2,000 per capita.
Yes.
So I think they are below the radar.
Yes.
Below the radar. I think the challenge is how to make these transactions profitable. I think. And we go back again, how to make and if I go back again to discussion this morning, having 70,000 offices is a nightmare for banks. So at the end, and I think it's not going to be easy, but I think course of time will bring everybody, and I go back again just to one comment about education. Most of these Islamic countries and developed countries, they have a younger operation, as you said, from the 14. And these guys, I don't think needs education. My son amazes me with how he knows technology rather than me. I go to him. I'm sure people may not say this, but I'm sure all of you go to your daughter or son and ask them to tell you how to operate a mobile or an iPad or whatever. So I think it's only time. We shouldn't be discussing this in the form of it's going to happen. But I think the form, and I go back again to what you're saying, which is financing SMEs. And I think I always, even in our bank, we always talk about SMEs. I think it's a different, when we talk about SMEs in the developed countries, it's different from SMEs in our countries. SME there, I think, if you look at their balance sheets, they are maybe a medium-sized company in the Arab world. SMEs that we think, I don't think it's bankable. SMEs, the way we look at it here in this part of the world, I don't think it's bankable. It's bankable there. There, what provide good coverage for banks, Mr. Batna will correct me, the tax environment, because they have balance sheets, there's tax environment, you can make sure that what you're getting here, the SMEs that we talk about, they don't have a balance sheet. It's an accountant and you don't know the numbers, so you don't really can judge of trusting lending company. Usually these companies in the outside world, they do it through venture capital, and like as what you're saying now. Investors will put money, take high risk, for us, that's the model will be broken.
Sure.
I think that's my answer.
Yeah, but if I may, I mean, just to add one point, I think the regulations, technology, and the type of customers is not something specific to Islamic banks and Islamic finance.
Of course.
I think it's a regional trait. So to be very clear, we'll not label this to only Islamic banks and Islamic finance. The capabilities are there. So I think it's more of a regional development rather than an industry-specific development.
Yeah, it's a challenge for the whole banking sector. There's no doubt about it. I categorize this in the financial inclusion, not in the Islamic finance. Rick, you have some comments before we open the floor?
Just to reiterate, I mean, obviously the cost of banking is significant. KYC, all of these regulations coming in, it's not just with the the banks, it's also other people. I mean, if you look at the way we've set up our company, we do KYC, anti-money laundering checks on customers and investors, etc. So that sort of structure is there in terms of regulatory costs, etc. I think where the banks have a problem is how nimble can they be in the new environment, which is really, internet-based models coming in or have been in for a while now. And adapting to that from a banking point of view is going to be a challenge because it's not in a bank's natural capability to set up an innovative division or whatever to really explore that hugely. I mean, I know all banks are doing it, but not really focusing on it. And I think that gives the disruptive players a lot of prospects coming into a market like this. Looking at, in terms of comments about credit risk, etc., I think as you grow as a sort of peer-to-peer marketplace lender, the knowledge base that you get enables you to actually accept more accurate risk on smaller credits, and that will grow as the sort of the network grows. Because ultimately, for an investor, it would be great to have $10,000 invested in 3,000 companies. So if one or two happen to go default, it doesn't actually affect your overall return. It's risk. It's risk spreading. So I think it's a cost element. It's how nimbly can people move and change their strategies in this sort of market, Sam? That's going to be key.
Bashar, I have a question for you about the religion in general. People who are excluded, financially excluded for the religious reason, how do you look at this point? We all agree that the financial Islamic banking in general is not dedicated to Islamic people. So,
I think this is an interesting point. I think Islamic finance, although the principles of it is based on Sharia, which is directed to the Islamic financing community. However, you will find a lot of similarities that would be adopted by social responsible or ethical responsible financer across the board. So I think having that and really making the awareness beyond the Islamic finance, i.e. the principle that it stands on, what does it really serve, will have the inclusion effect. So I think it's worth educating what does it really mean and risk sharing, and maybe talking about the lower part of the pyramid that I talked about. You will have some investors that are willing to take higher risk and put a specific investment amount, i.e. to gain profit, knowing the risk, and to serve that specific part of the community. This doesn't need to be an Islamic investor. It is helping a cause, rather looking at the mean of the cause. So Islamic finance by itself is a mean and a tool that can be used to serve that community. However, the objective and the strategic objective of that can be much wider than the Islamic finance and the Islamic finance community, to whoever subscribes to ethical and social responsible financing.
Sure. Yeah, go ahead. We need a microphone, please.
Can I, in the meanwhile, just add, maybe until you get
Yeah,
the microphone?
While they bring the microphone, go ahead.
Yeah. For me, when I look at the population and from our research and discussions, or whatever, we think within any community, I would take like Kuwait as an example, you will have 10 to 15% are liberal. No matter what you do about Islamic banking, they joke. No matter what you try to prove them. So these guys are little bit, you will take them out of the equation. Then you're going to have another 10 to 15% are core Islamic. Even when you say murabaha or tawarruq, they say haram. So these are another section. I think where are we talking about, or what we're addressing, is this 60 to 70, 80% in the market. And these guys are, we'll say, conservative people. And these guys will prefer Islamic banking, if they are Muslims, provided you give them a good service and innovative products. You cannot tell them, okay, I'm going to deal with you as an Islamic, but you are not giving me a good service and you're not giving me any products. And we have found during the last 10 years ago, and at least for us in Bobian the last 6 years, that non-Muslims do deal with us if we come with the right service and right product. Because at the end, as I agree, and if for them it's a financial institution.
Yes, sure.
The reverse maybe, the core Islamic will not go, but a normal customer like conservative or even non-Muslim, if you can give them a good product, they will come.
Sure.
So
we
always talk about Islamic, but I think the Islamic are talking about the 15%, but the others, especially the young people, I think they're looking for good service and good product.
That's all, yeah.
If you add on this Islamic, that's good. But I will not go for you because you are Islamic. I'm being practical, by the way. I'm not coming to you because you're Islamic, but you give me a lousy service, no products, whatever.
Thank you. So we go to the first question, please. Your name and institution.
Hello, good afternoon. Assalamu alaikum. Shabir Razvi from London Islamic International Finance Solutions Associates based in London. Quick comment and a question,
employer?
if I may. Sorry?
That's your previous employer. You always get... Sorry.
Freudian slip, I think. The quick question is, for the last 2-3 years, there has been a whole debate of how Islamic finance. And yes, profit is, of course, a key factor, and Sharia allows that. But I think perhaps a question to all the panelists is, should we not be looking at how profit is measured itself? Because there's a whole debate in the economic circles and the financial circles that GDP, that we measure as a measure of how good the economy is doing. Then we have a debate that, for example, a cigarette manufacturer, you will show in the profit sort of aspect on the bottom line. However, what damage that they're doing to society, if we take that out, cigarette manufacturers are not making profit at all. So we've got to perhaps, as operators in that space, if we are talking about Islam, perhaps we need a paradigm shift to give new ideas. Like in UK, we've got a new economic foundation, which is doing brilliant work on this area. Perhaps we need to look at that, how we measure profit itself and what profit means.
Okay, we fortunately or unfortunately, we take this question as the first question and the last question. And we give our esteemed speaker to have a brief answers and the last remarks for you, because the session is end.
Yeah, I mean, the word profit is you can link it directly to your own profit. You're doing something to gain profit on, i.e. being a trader, being an investor. However, the reward, whether it's in this world or to satisfy your personal objective, it can be measured by various ways. It is exactly similar when someone asks me, what is ethical finance or social finance? That's a very broad world. It could vary from one country to another, one society to another, even from one person to another. So I think when someone mentions profit and financial profit, it means actual profit, which is allowed under Sharia and part of the mechanism and textures. However, your own profit and your definition as a community, as an institution, or even as a person can really vary from one person or another. And I don't think we should restrict that. So I think it needs to be to the assessment to that specific person, institution, or whatever mechanism is dealing with that.
Rick, please. If you have any comments.
I have nothing further to add on that.
Mr. Al-Majid.
I think you touched on I didn't want to comment on that in my presentation, but we go back again to the business model of banking and investors. Islamic banking now evolved into banking. I think from the start, Islamic banking was more of the investment side. It was investment in real estate and others, and then now it's going back to banking. The way we look at risk into financing SMEs to reward the investors with the high risk, you need around 10%, maybe 15% return.
At least.
So the profit margins that being charged for these SMEs are hefty. While in banking, the returns for deposits is around now 1% or 2%, whatever, less than 1%. So I think we go back again while we are saying, this is a very touchy, and I usually don't get into religion, but you would question the equality or the fairness of charging this SME guy a 15-20% margin to compensate the risk, to bring to the investor around 10% margin, while on the conventional banking and Islamic banking as a banking, not investment side, as banking, you will charge less. And this is a real debate on this, and I don't have the answer.
Oh, thank you so much. Thank you, Mr. Al-Majid, Mr. Butner, and Mr. Natur. Thank you for sharing with us this session. We hope that we deliver some messages and probably we have some lessons. Thank you.